Welcome back, everybody. And yes, I hope you guys had an absolutely fabulous Thanksgiving. We certainly did. And I know we said, maybe we'll do one on Saturday, but here we are. So the question is, are sellers slashing their prices to get their home sold? We're going to go through some of those metrics. I know that there's a lot of information that is out there, both good and bad. And let's just kind of dial it in. And again, we'll keep it consistent with the metrics. And remember to like and subscribe if you want to get good information that has absolutely no selling. This is a great place for you, so you can make the best business decision for you and your family. So let's get the show on the road. Are sellers slashing prices? Are we seeing prices coming down? Are we seeing real estate Armageddon? Well, let's go through that. So first, let's take a look at our first chart here. So home sales in October climbed to the highest they've ever been this time of year. Okay. Down below it says mortgage application activity at the highest levels in 6 weeks. Now, with interest rates coming down, that is completely expected, because when they were up, bonk, bonk, next to 8%, and then we dropped those rates back down into the low sevens, didn't hit the sixes yet, but we're definitely in the low sevens, mid to low sevens. That is going to spur on some folks because they see that as a half a point swing just in rate alone. So when they get to about 6.8%, 6.7%, people are going to come out of the woodwork. Hands down, it's going to be just a race to the finish line for a lot of buyers who have been kind of on the sidelines, because again, there's still massive pent-up buyer demand. Let's go through that. So let's take a look at our next slide here. When we take a look at the information that's given, so Joanne Drilling, who does national data and reports for the business journals, she said, basically, according to Redfin, which I agree, our numbers are consistent with this, that basically Seattle is down about 37%, or 37% of active listings actually reduced their price in October. Now, some of you are saying, hey, does that mean that our market is coming down? The answer is no, because at the end of the day, when we take a look at these numbers, okay, what's interesting is most of this was based on fear of missing out, or what people remember over the last 2 years. So if we take a look at and continue on, I don't know why it highlighted the whole thing, because that is definitely not how we did it. But anyway, some sellers are pricing too high because of the fear of missing out. Basically, they are looking at what happened last year or over the last 2 years. And they're saying, hey, my neighbor's house sold for X, and so I should start at X. In fact, I'm going to go above X. Well, you can't do that, because X with interest rates 2 years ago, those are two different games. Two different games by like 4 percentage points. And when you increase the mortgage interest rates, the buying power comes down. So yes, we are seeing some price adjustments. But what is most important is that we're actually seeing about a 1.4% increase from where we were at last year in October. And I know we're at towards the end of November. We're going to get there in a second, but understand that when we take a look at the year over year, even on a national level, we're actually doing incredibly well. In fact, sales have slowed down. Normal. Seasonally, sales have really slowed down, right? Because if we take a look at just the running 7-day average, take a look at this. So we had 248 that came on market. That's about average. 779 went pended. 531 actually sold. Seasonally normal. Back on market, we had a couple of failed sales, and that was about 69 homes. Some super great opportunities for those of you that know that a seller is now super motivated to be back in a contract. We do offer that free list. Let us know. But, whether it's in Bellevue, Edmonds, Bothell, a couple in Mill Creek, there's a couple of down south that are really well priced. There's a couple up north. in Everett and Arlington and Marysville, super well priced. Same thing with Tacoma, super well priced, albeit Tacoma took probably one of the biggest beatings. In fact, Tacoma hit the top 10 as far as number of homes that actually had the greatest number of price reductions, okay? And so when we take a look at the overall numbers of what's going on, right? And we take a look at our sales and what they're doing year over year, all things considered, look, our market is still doing incredibly well, okay? Interest rates are the biggest driver right now. There's still a massive pent-up demand. In fact, when we head over and we take a look at the next slide, when we talk about the Northwest MLS and what are our numbers doing, year over year, actually, it's not bad. Consistently, okay, so inventory 17.1% lower, about 25% less sales, 20% less pending sales. SALW is same as last week, or what we call the SAL. That's all. What's this week? That's all. It's last week, same as last week. Nothing really has changed. And in fact, guys, nothing is going to change a whole lot between now and about the middle of December, and then things really pull back. Why? We've got Christmas, we have New Year's, and then we have the recovery of New Year's as people adapt to the new year and all of the resolutions or whatever's going to happen. And then about late February, our market will start to take off. And then by March, it's in full-blown run. All right. So, but you might say, well, George, how does that compare to our new construction? New construction is still doing amazingly well. And so they are, in fact, propping up a lot of what we're doing. So when we take a look at our numbers here, you can see inventory is down 8.7%. But look at this. Pendants are still 19.7 above. Even last week it was higher. And even though we look at our inventory is still greater, okay, than what it was last year and even month over month, because builders are seeing massive incentives or offering massive incentives to entice you to their plats. Now, again, another great opportunity for you guys is to take a look at new construction that is offering a lot of incentives to attract you to their plats. Why? Well, because they have that ability, because many of them own their own lending companies. So if they're based on salary, that gives them a lot more leverage. Now, as interest rates have been coming down, they've been able to entice people even more so because they can offer additional incentives. Make sure you're working with a broker that fully understands builder incentives and how and what a builder wants, because if you scratch their back in the right place, you get what you want. They're nice and happy, right? Okay, so if we take a look at then the next phase, what's going on? You know, last week and the week before, we talked about November 30th kind of being the oh my gosh, the CARES Act is ending, and there are going to be some borrowers that have been being supported through that on a national level, some on a local level. But when we take a look at these numbers, initially they might look super scary, but are they really? Well, no, not really. Why? Well, because as we head over into our new construction side, and we are not new construction, but the REO side, right? Let's take a look at these numbers. So year to date, okay, so that looks like a big number, and it's not, right? Because we're dealing with small numbers. Even, at 16.9, look, it's just a few homes different. But even I look at last month or this month, year over year, okay, again, inventory 33%. Well, look at that. New on market up 133%, and solds or pending are up 53.8%. That's a big deal, because when you're dealing with small numbers, you're going to see some folks saying, oh my God, it's coming out. It's mayhem. Foreclosures, that shadow inventory is coming out, and it's going to be crazy. No, it's not. These numbers are super small. And so when we add just a few homes to it, it makes it look like a massive jump, and it's not. So keeping things in perspective. However, to be clear, understand, I'm not saying that we're not going to see an increase in notice of defaults and notice of trustee sales after November 30th. I think you will. but it's not going to be, catastrophic. It's not going to be the days of the RTC back in the late 90s, or early 90s, I guess. It's not going to be the debacle that we had in 2003, and then definitely not 2008. Now, will lending tighten up as we head into 2024? Yes, it's going to. That's going to make some innovative programs that are out there. Interest rates, because we do see or anticipate a pivot from the Feds in the first quarter, and that means that commercial pricing, which does need to come down, that's what the Feds control, not residential mortgage rates will come down and follow it. Follow your 10-year Treasury when you take a look at that. Now, if we pop back, let's take a look at financing options right now, right? So here we go. Actually, let's talk about days on market real fast. So when we take a look at this, initially you think, oh my gosh, days on market, it's up 84%. Well, okay. So when you take a look at it at the same month over and over again, it's a one-day difference. However, homes are selling for more today than what they did last year at this time. In other words, we were at 94% list to sales price. We're at now 97% or 3% better. Now our inventory has gone up. That is absolutely perfectly situation normal. Now, when we take a look at the mortgage interest rates, look at this. So our par pricing is down. Last week we were at 7.4. Now we're at 7.29. And as you can see the upper chart, we can see that we're actually at, in the, 7.3-ish. And when we take a look at these numbers, we can tell that interest rates have been falling down. We've been getting some good numbers, statistics that the Feds monitor and everything else. And the investors, the industrial investors and whatnot in the stock market and bonds and treasuries and everything else, those people have been saying, hey, this is promising. It seems like we're mitigating a lot of things. So by doing so, then mortgage interest rates come down because, again, they're based on risk. So if you're interested in making a move, make sure that you're keeping an eye on it because sellers are very motivated this time of year. If you're a seller, make sure that any buyer that comes out to your house, you are giving them that special love and attention because only serious people come out this time of year. Just saying. All right. Now, we move on. Let's take a look at this. Like, subscribe, and share. Make sure that you're coming in and, giving us the love that we need because, well, we appreciate you. Everybody that watches the show, it's absolutely fabulous. Make sure you keep asking your questions. We try to answer them during the show. We also respond back personally. Sometimes we do a personal video for you guys. And in the meantime, thank you very much. Hope you guys had an absolutely fabulous Thanksgiving. Smash that subscribe button and, share it with everybody that that could benefit from this. And then, of course, 2 people that you don't like. So with that, I will wish you guys an absolutely fabulous weekend and have a great day. I'll see you on the next video. Take care.